You did a pause after raising rates 300 basis points and yields pretty much dropped again. Do you think that was a reasonable reaction on the part of markets?
No, you cannot judge the impact only through the day-to-day movement, but there are two reasons why we pause. And the first one is expected inflation path. Our current inflation rate is around 5%, but we are expecting from March on, the inflation rate will fall to around 4% and to 3% level by the end of the year. And with this path, we think this is a good time for us to pause and reassess the accumulated impact of 300 basis point increase on the real economy. And the second reason is there are huge uncertainty abroad, like how long and how high the U.S. policy rate will go up, how the China's reopening will affect our economy as well as exchange rate, all these issues, oil price too. So we think there are high uncertainty. So in the midst of the uncertainty, when the situation is very foggy, it's better to stop the car and see what will be the next move.
You talk about uncertainties, but what is certain is that the U.S. terminal rate is going to be higher. Before it was under 5%, now it's 5.5%, some suggesting even 6%.
Right.
Given those circumstances, should you really be pausing?
You know, actually, since we are having a flexible exchange rate system, the interest rate gap does not necessarily affect our exchange rate. But as you said, the too broad gap can cause some unintended consequences. So we are watching. At this moment, as you mentioned, we previously assumed that the U.S. interest rate will be around 5.25, around 5. But now the situation is changing very rapidly. But no one knows what's going to happen. So that is why I'm saying that in the time of uncertainty, it's better to decide before these things realize. So we may react after we see what's going to happen. Actually, this is one reason why the majority of our Monetary Policy Committee members want to keep the option of increasing interest rate down the road, even though they pause this time.
Given current circumstances, what do you think is the Bank of Korea's terminal rate, and are you close to that?
Look, when we talk about terminal rate in Korea at this moment, we are actually mentioning our view only on a 3-month period rolling basis. So when you talk about terminal rate, we are thinking about in the next 3 months what will be the terminal rate will be. And one out of 6 Monetary Policy Committee members, excluding me, one member says it's better to stay at 3.5 at this moment, and the other 5 members want to have an option to increase 3.75 in the next 3 months. So, that doesn't necessarily mean any change. There will be no change after the 3 months, but that is kind of current view of the Monetary Policy Committee member.
President Yoon has been asking commercial banks to cut their rates to make it easier for the consumers. This seems to be in contrast to what you're trying to do, which is rein in inflation. I mean, is there a contradiction there?
I got this question, several times, but I think you can interpret this as 2 ways. One is that when President addressed this issue, the issue is whether Korea's banking sector, which is dominated by the 5 major banks, is too oligopolic, so that whether the deposit rate or the interest rate increase is reflecting fair competition. That's one issue. The other issue is that now the interest rate on lending and deposit mortgage rate is going down. If you compare with January, that's what people say. Is it consistent or inconsistent with monetary policy? But the main reason why the interest rate was so high and at the end of the December is because we have a short-term liquidity constraint caused by the project financing issue. That caused market rate really jump on in November and December. Now things have become normalized. So I think it's natural for us to see that the market rate's going down, but still the market rate is well above the previous range. And then also compared with the pre-pandemic level, the spread between the market rate and our policy rate is even similar or even slightly higher. So I don't agree that this means that there is an inconsistency with monetary policy. I see that the cumulative impact of 300 BP increase has an expected impact at this moment. That is why I want to reassess
IMF's Kristalina Georgieva says that fiscal policy will have to work in tandem with monetary policy, not do the reverse. So in Korea, you think both monetary and fiscal policies are working hand in hand?
Actually, I'm very lucky governor. When I see other governors in all the world, they are really worried about the fiscal authorities are going in the different direction. But thanks to our government, and especially Prime Minister, I think he insists that until we have a price stability, he emphasized the fiscal tightening fiscal policy is must. So I think that way I'm very lucky, and our monetary and fiscal policies are very well in coordinated.
Governor Rhee, we have the Korean won hovering at about 1,300 to the USD. It's been weakening since the early of February. Is that a concern for you? Might that fuel inflation in the coming months?
Let me say, I think it's not a good thing for a governor to mention specific level of the exchange rate. So I shall refrain from it. But if you look at how our Korean won behave from December to January, actually our Korean won was the currency which has the highest appreciation. So maybe it's a kind of small adjustment. But look, whatever, I think targeting the level, we are not targeting the level of exchange rate. Whenever there is some big volatility and the investment sentiments goes to the extreme, then we have to, think about several measures how to correct it.
So you're quite comfortable with where the Korean won is?
Especially yesterday when we announced the interest rate, the new policy of we paused interest rate, probably for the first time among major countries. Yeah, I have to admit that I was slightly worried about how the exchange rate will behave. But yesterday, actually, exchange rate was appreciated and it's quite stable. So for the time being, it really shows that the major driver of our exchange rate is not our decision, but how people believe that U.S. monetary policy will go in the future. So that is a very complex equation to solve.
Korea's property sector is showing signs of weakness. Are you concerned that it may impact growth?
Yes, because the real estate sector is relatively big sector in Korea, and especially last 2 years, the housing price increased quite a lot. And I think the current situation is it's a good adjustment to the kind of adjustment period. And good thing is that we are a little bit more concerned at the end of last year because the housing price drops quite rapidly. But now, even though it's going down, its decreasing speed is slowing down. That's a good sign.